Good day, traders. Mindset reset. Today we're talking about failed breakouts. So interesting day today, Free Cash Wednesday, and we're midweek, and we had Powell, Governor Bailey, and Bank of Japan Governor Ueda all speaking at 9:30 New York time, 9:30 a.m. And we had some markets that were set up for movement. DJ30, an absolutely perfect textbook chart. Put your 5-minute chart up there. But come back and let's talk about what we spoke about yesterday, opening range. Still some confusion from traders, not quite understanding other time frame traders and what that means when we break a daily boundary, especially at the beginning of the week. A great question, trader. Monday. Okay, so I reinforce this repeatedly that Monday is day one, because when you start a new week, it's a new timing cycle. It's a new template, regardless of having other setups that can build into a Monday day three. So if Monday doesn't break any boundaries and it's inside, then at that stage, we're not aware of any other time frame traders having started the new week into that market. And so, as I mentioned to this trader, to Joseph, you can still have a Friday, Monday, Tuesday template in a 3-day setup. So we have a new week, a new timing cycle. That's our opening range for the week. And in some cases, we will break a level. We might have a split opening range where, like we saw last week on a holiday Monday, we saw gold, for example, break down and close below the low of Friday, first red day on Friday. That tells us one of two scenarios now. We have a market that is out of balance because it closed outside of the previous day's range. And we also have short traders in the market. Now that is different from a market that punctures one side and reverses. So another question from a trader was, does that mean we're just looking for short selling bias if it breaks one side? Now it depends on the template, but typically on a day two, write this down in your notepad, typically on a day two, we will see a false break prior to, in most cases, a US session, unless it's a British pound, a euro cross in the London window, breaks the low of the Asia, sets a high low, it breaks the low of Asia. But that first break often is the beginning of a pump scenario for a dump, or a dump scenario for a pump. Higher highs, higher lows, setting up for the dump and pump. Lower highs, lower lows on the inside, setting up for the pump and dump. Now, opening range, when we break out of the opening range on a day two, we can get parabolic moves that break out. Now I want you to think of, just understand what happens when a week starts. This is really paramount. When a week starts, they set a high and a low. Bring it back inside, unless the market goes on a day one runner, which is broken out and continues to trend, i.e. a pump day or a dump day. And I always say this, don't counter trend a day one runner. But if we are inside of the opening range, what does the market want to do when it's ready to do it? It will break out. It will hit one of those sides, because that triggers other time frame traders into the market. They're now increasing the number of players into the market as the week evolves. We can get a parabolic move from a session from inside to out, as we talked about yesterday with gold. Perfect pump and dump scenario that breaks out. Now we have other time frame traders in the market. The market closes out of balance. Closing out of balance means that it, as Dalton talks about in market profile, we have a market that will either return to balance, pull back inside, or it will pull back and continue to stay out of balance, a trending market. So we can get day one breakouts, day two breakouts, day three breakouts, which are breakout pullback continuations, which can culminate in a 3-day, day three breakout scenario template. We have Monday to Wednesday templates. Now, if you go back and look at the New Zealand crosses, you will see scenarios on Aussie dollar and New Zealand where we had false breaks of the opening range. That gave us day three parabolics. So coming back to understanding what's happening, they trigger the high of an opening range. That breakout fails. It doesn't really break out. They just trigger breakouts, pull back inside, we have long traders in the market at the high of the opening range that goes parabolic on day 3 through the low of the week. So they trigger new longs into the market, get traders trapped up high before reversing and blowing through the floor. Same thing on the British pound, exact same template. So coming back to the indexes, we had NASDAQ failed breakout of our opening range on day 2 that reversed. And then we had, it broke out on Monday, pulled back inside on Tuesday, took out the high, and that gave us a dump and pump scenario. Failed breakout on Tuesday. Tuesday now becomes our day 1 low of the week. Day 2 is our Wednesday, which is day 3 in our template for a dump and pump parabolic through the high of the week. S&P, same thing, went back to the high of the day, whereas the DJ30 crept down and blew off into breakout traders from Tuesday's US session. So it's so important to understand what that means about other time frame traders, because traders are still looking to short things up high that are still on the front side, or buy things down low because they're down low and they're still on the front side, and we're at day 3. And if we don't get a parabolic setup on an instrument, traders forget about it. And write this down. Wednesday's our new day 1, our new range now, heading into our Wednesday, Thursday, Friday closing range of the week. Could be for a reversal day on Thursday. It could be for a reversal day on Friday. It could be for a parabolic trend day on Friday. So gold, oil broke out. They were both out of balance markets. They broke the lows again today. Day 2, breakouts triggered. They both closed out of balance yesterday. We're still out of balance. The last time I looked, oil reversed. 3rd hour reversal. We had the major speaking at 9:30, and when I see that, I automatically said, watch for 3rd hour, because New York Open will typically take traders back into the wrong direction, trapping them as they did on gold at the low of the month. It broke the low of the month. So you've heard me say this. At 7:59, mark your highs and your lows for that session. So London, we made lower peak formation highs just above the double zeros, and we had a low of the day. We have major red news at 9:30. New York Open made a higher high on the inside. The 1st hour made a slightly lower low. We redraw our boundaries because we have major red news, and we've only now broken structure on the inside. They went vertical straight at the open for 15 minutes, right to the low of the day, the low of the month, the low of the week, and an engulfment right away at the bottom. New 15-minute cycle for a parabolic stop hunt back up into the New York Open shorts for 50 pips. Now, understanding that that is a session scalp, and as I've talked about, gold is not an instrument for traders to trade unless they have the knowledge and the experience and understand the setup that you're trading, the timings, the levels, the behavior of price. There was a possibility that it could have went back to the high of the day because we're down low day 3, it's the low of the month, and we're near the end of the month. So at the same time, respecting that that is a session parabolic scalp, not sizing into this. We're looking for sizing in on a 3-day setup for a parabolic when the market is set up for a reversal either at the high or low of the week with a 3-session setup. That is a session scalp. Oil gave us a session scalp that eventually went higher. Parabolic could potentially be a measured move. I haven't looked since. But these are the things to be cognizant of. When other time frame traders are in the market, for example, on NASDAQ, we had a failed breakout. Other time frames now can be given that juice, which is why we saw that explosive move go back through the high of the week. Day 1, day 2 continues in the direction of the trend. Same with the S&P, it just didn't quite get there as strong, but the NASDAQ exploded. It was a clean chart, super clean chart, 3 sessions, 3 levels of drop, coiled market, 3rd hour, boom, back through the high of the week measured move. No idea what it's done since, but that being the case, we can see tomorrow being day 3 in that 3-day template. Now, I don't know what it's going to do. I don't know how it's going to set up. It could be an inside day. We could see a major parabolic move on Friday. But Wednesday is our new range now, midweek, heading into our Wednesday, Thursday, Friday template. So understand the opening range. The pound was a perfect chart. The New Zealand crosses were perfect today for like significant easy cash. We saw pound Aussie, Euro Aussie yesterday, explosive parabolics on day 2, huge moves, huge explosive moves that were sizable and scalable for easy free cash on parabolic moves. We've had at least 600 or 700 pip parabolic moves in this Wednesday. So the US session, not quite as, I suppose, fantastic. The news kind of threw people a bit. Didn't really, and here's the thing on the news. So sometimes you're gonna say, I should have just traded it because nothing really happened or exploded at 9:30 other than the New York Open. And the time that you do that, or you put some significant sort of size on there, that's when you get wicked or smashed and wiped out and you realize it's not worth that. You don't need to do that. There's plenty of easy cash laying on the floor. And I want to reinforce one little concept before we finish up today. It's not about trying to sell the high and buy the low and get a lot of pips. I'm looking for a coiled market that I can put size on and be in and out of that market. So there's session scalps, and then there's coiled parabolic setups that you can put size on, that rinse and repeat. Not worried about catching 100 pips. You can make more on the 25 pip coiled parabolic move than some traders will make on 1,000 pips in a month, and you can make it in 10 minutes if you're trading size. Learn to scale your trade setups in size. It's about making money, not about trying to catch pips. I'd rather take one trade than 5 trades and say how many pips I've got. So I'm looking for these setups that are 90-10 that I can put size on. You could take one trade a week and make more than people who take 50 trades a week, if that makes sense. Understand the power of sizing and scaling into parabolic setups, managing your risk at the same time. You're not taking on more risk, still controlling your risk, but you're sizing into a 90-10 opportunity that you can be in and out of the market in less than 15 minutes in some cases with an explosive, scalable, sizable parabolic opportunity. Free Cash Wednesday. Take what the market gives you. Still a really good day. We've had a fantastic week, but understand that tomorrow and Friday we can see parabolic reversals or trend trades on day 2 on our Thursday, and Friday same sort of situation depending on how the template sets up on the instrument that you're looking at. Hunt out the best setups. Be patient, understand the importance of timings, levels, the behavior of price, and then know when you've got the right setup. If you're not sure what they are, go and look at the New Zealand crosses. Go look at the Aussie dollar crosses. Forget about the red news from today, but go look at Tuesday. Those are parabolics in the Asian session. The same type of opportunities happened in London. They are there every week. They are not going away. Understand what the templates look like, and then understand when the timing window kicks in, how you will trade them, how you will manage your risk, when to size in, where you will take profits, and then walk away and get off the screen. Get on with your day. Have a great day, traders. Keep getting better, 1% better every single day. Keep it going and keep it growing, and may the markets go with you.